All right, so we're recording Sunday, February 16th. We're going to do a quick equities market update and outlook for the week ahead with our equities analyst, Faisal. How's it going, man? How are you doing?
Man, good to be here. Good to talk to you again.
Yeah, I think people definitely liked the equities update we did 2 weeks ago. So I want to do this, regularly and give people an insight of how we're looking at the market for the week ahead, what headlines we're looking at, the things we're looking at in terms of you know what's on our watch list, etc.
Yeah, sounds great. I'm ready to get into it. But just a disclaimer, all the ideas that I share are my own opinion, and so for everyone listening, please do your own research before you make a trade or make any investment decision.
Absolutely. I'm glad you said that. So, folks, again, we are not here to provide financial advice. We're here to give you our take on the markets, something that we've been studying and trading for years now. So, if you feel this information is helpful to you, again, do your own research. And whether you want to pull the trigger on buys or sells, that's ultimately your decision. Okay. So, first things first, come join the Cryptosomniac community because this is where Faisal does most of his work. He provides daily, opening updates of the market, the things that he's looking at, sectors he's watching, midday updates, and then closing updates. I think this is a very fantastic way of, explaining your content, and I'm really glad you're doing something like this.
Yeah, thanks. I watch the market consistently and throughout the day, and I watch a lot of key points. So, even though I write kind of short paragraphs, a lot is going through my head, and I kind of like to pick out some of the main things that I'm looking at, and just, highlight some of the themes so that people are consistently updated and, not caught on the wrong foot at the wrong time.
Right, definitely. And I really like the fact that you go through the stock market chat channel as well and you answer people's questions. I think this is a very great way to interact with our community because I think a lot of people have sort of a misunderstanding of, the stock market and having an expert like yourself explain things on a day-to-day basis will definitely give, folks a better understanding of, where the market as a whole stands, how maybe traders such as yourself are positioned and what exactly you pay attention to. So I'm really glad you're doing that.
Thank you so much. Yeah, I like to try to include, short-term ideas, long-term ideas, just, anything that people have a question on, feel free to ask me on the stock market channel, at any time.
Yeah, for sure. All right, so let's get started. I mean, want to give us a recap of last week and then also how that ties into maybe what you're looking at the week ahead?
Yeah. So last week, most of the headlines that we're going over were coronavirus related. And as you saw, the market seems to ignore a lot of the coronavirus headlines. So you'll have, stocks like Nike and, um, even Chinese companies where you would think the factories would be shut down, like JD.com made a 52-week high just Friday. Alibaba, they reported Thursday, and I think the market reacted well to it, but you would expect it to be considerably lower, with all the headlines that are going on. So right now, the market is kind of telling you, hey, uh, it may not view the coronavirus as seriously. I mean, I think we all know that China may be not telling us the whole truth as far as how many cases are really affected, but that's not for us to play. You may feel that way, but don't try and trade that way. And the market's telling you exactly what it thinks. So until it tells you not to, you kind of just have to keep riding the wave. And I think this provides great long-term opportunities for, some sectors that have been hit pretty badly by this coronavirus.
Right. Yeah, definitely. And I'm glad you brought up companies that are based in China, especially, something like Alibaba, because all I can see from Alibaba right now is just more or less just a big sort of range of consolidation. You know, there's no perilous signs that are giving us any indication that a sell-off is starting or, there's dangers ahead. It really just looks like it's kind of, consolidating here, trying to figure out what the rest of the market is going to do. And if all goes well, this thing might pop off even higher.
Exactly. And when you think about the coronavirus, you have to be more realistic than not. And I think you have to look at it in terms of this is a short-term problem. And if you look at Alibaba's earnings and revenue estimates before, this coronavirus hit, I mean, they were making $50 billion in revenue, and they were saying they were going to make 75 billion the next year. I mean, to grow your revenues by 25 billion in 1 year. I mean, I've loved Alibaba for so long, but the metrics really stand with this stock. And you can see, like, even though the headlines are pretty bad, people are not going to work over there in China. It really hasn't affected the stock. Like, it's still above its breakout range. If you check out even JD.com, I was in that this week, and that thing has really rocketed higher and higher. I
Oh,
mean, look
wow.
at that. It's like totally ignoring the whole coronavirus. Yeah, that was from what is that, 2019 or 2018 when it started to decline. But
Oh,
as you can
right.
see,
Yeah.
the recent movements since the virus started, I mean, this stock just keeps going higher.
Yeah, and I'm seeing these kinds of big multi-month consolidations, and then these breakout patterns, getting some nice retests, and then breaking out up ahead. I know Amazon's kind of looking almost similar to this thing, where you had somewhat of a pullback, maybe a consolidation here, and then more consolidation, and then starting to break up. So I'm really glad to see most of the market's position even higher for maybe even higher prices, especially after big breakouts like this. Because sometimes what you see is, you'll see consolidation, breakout, fails, and then it falls back inside the range again.
Hmm.
Yeah, so this looks, pretty healthy to me. So Alibaba and JD. And so what I wanted to talk about, this article that I pulled up about buybacks, right? Stock buybacks last year, and I think the last several years, what we've been hearing a lot is a majority of the companies have been just on an aggressive spree of buying back, their stock. How do you factor that in with what you're looking at in terms of stocks to buy when it comes to company buybacks? And I mean, how does that affect your decision, first of all?
Well, first of all, I think I've tried to play the short game with this whole buyback stuff. I look at stocks that are actively doing buybacks and trying to say, okay, if I'm playing a short-term range, are my odds of success elevated because of this buyback stuff? And in the short term, I don't think I was that successful on it, but definitely in the long term, you have to keep that in mind. I mean, it's just a natural increase in value. And so if you're playing the long game, like Apple had been doing such a buyback, like such a huge buyback when it was at $90. I mean, and I think that has been a huge fuel in taking the stock up to where it is now. I mean, where's it at now? 320. I mean, it was at $90, like 2018 or something like that. I don't know.
Yeah,
And
yeah,
I
yeah.
remember they were doing like a huge buyback at that time. And so, that really does play into the long-term view, but short-term, I wouldn't take too much into it.
Gotcha. No, that's good to know because obviously like buybacks to me, when I relate it to crypto, it's first of all, obviously just basic supply and demand, right?
Hmm.
The less shares you have out in the market, the more say value is given to the outstanding shares that are out there, you know?
True.
And so with companies like Apple, when they start doing buybacks, it makes me realize that, okay, well, clearly the company's doing well and they, want to buy back more of their own shares. So that means that whatever is out in the market should probably be worth more. Just
Yeah.
that's how I think of it at least.
I think that's a very simple way to think about it, and it's efficient. That's exactly what happens. And so I think, when you think about it that way, the best way to play it is kind of the long term, and I think that works perfectly.
Yeah, yeah. Um, can you give us a quick update on the VIX check? And first of all, can you give us a definition of, first of all, what is the VIX?
So I'll give you kind of the standard market definition where VIX is kind of just another word for fear. It's largely considered the fear volatility index. But recently, I think, in my own opinion, I don't kind of view it as fear per se, because a lot of times, you'll get these spikes of fear, and it's largely a lot technically based on how much it goes up. So even though the fear is kind of high and shoots up high, it doesn't really mean the fear is enormous, but largely staying within a trading range. So I think, fear is a good way to measure how much prices can go up or down. It's fear is volatility, but it's not necessarily, should scare you out of the market entirely. As we've seen, we had a small spike up in the VIX just very recently when the coronavirus started coming back, and the fear felt very high, but the VIX never told you that it was really that high. And
Right
so it
here.
was actually, yeah, exactly. It didn't even break its technical support ranges. So I kind of saw that as one of my factors into, okay, I think I kind of want to buy this market because the headlines and everything are telling me it's fearful. It's really not a good time to be in the market, but the VIX should shoot up a lot higher if that. So I don't know if it's an accurate gauge of fear itself, but definitely volatility for sure.
Right, right. One question I had is, when you hear of these definitions, right? I mean, everyone in their, whoever's trading or investing in the equity markets, I'm sure everyone has their own strategy, right? Some
Mhm.
people probably rely on the VIX, giving them potential, top or bottoming signals. Some people might, look at interest rates and inflation as just pretty good indicators of, buying or selling. What are some things that you particularly look at, on a day-to-day, week-to-week basis, if it's, say, not the VIX?
Oh, I look at kind of everything that you described, except I probably don't look at currencies as much as I should. I definitely watch interest rates a ton because I'm at the forefront in the belief that this market is fueled by the bottom line that interest rates will remain low and are kind of pegged to the global economy. And I think that provides a really good scenario for U.S. companies to, take out debt and really fuel growth. At least to this stage, I don't know if it'll actually pay out, but we're in the stage of hype. Okay, we are in the stage of the first innings of this entire thing, and so these companies will soon, be taking out debt, and people will be estimating that the growth is high. Whether or not they meet that growth will be decided probably in the next 2 3 years. But I think, with interest rates being so low as they are now, and I think they're going to continue to remain low, that just makes me a buyer of this market for at least a year, 2 years out.
Wow, that's a really interesting way of looking at it. I mean, um, especially when you look at ETFs like this healthcare ETF, or individual stocks like, say, Tesla or Amazon. I mean, they are just they seem like they're at enormous prices,
Yeah.
but I also don't see them slowing down, which is the crazy thing. And so I think you're very right. Like, I don't know how to be a bear in this market when it looks so great. I mean, as you just said, if interest rates are going to stay low and remain low, and inflation is probably going to remain low, what is stopping this market from just going higher and higher?
We're waiting for a very euphoric time. Like when you talk to a lot of finance people, I have the opportunity to talk to a ton of traders and finance associates, and everyone is trying to find the bear case. It's like, I remember my dad telling me about the times when he would trade stocks during the tech bubble, and he's like, everyone would be like, no one was thinking of what could happen wrong. It was always just like, it is the greatest time. The internet is going to be the greatest thing. We have something that's solid that we can build off of. But obviously, it just went up too fast to its time. But people really did see the value in the internet, and so you're waiting for that euphoria, and I don't think you're going to get it with this type of scenario. So I think, you just have to wait and see. But this market still has too many doubters, and I think that's why you'll see the market continue to go up.
I see, I see. So you're saying that the real sort of euphoria hasn't even kicked in, and if it hasn't kicked in, that means that we haven't even seen sort of the rocket high prices on, stocks.
Oh yeah, I think so. And I think the next area of euphoria may be associated with AI and 5G. You start to hear all these rumblings, like there are some reports out that 5G could create $15 trillion of wealth for economies. And so having that growth expected, it could be something like what we saw in 1999, 2000. And I think just watch out for those themes and how people overvalue them or maybe react to them initially. If people are very euphoric at the beginning, and you're starting to see a little bit of it,
Right.
especially with 5G, AI, sort of. I think there are still people who are doubting it, but you'll get to a point where I think once some initial technology is created and people are like, wow, AI, like there's so many things you could do with it. I don't know, until you see that euphoria take place and asset prices literally skyrocket even more than they have now, I think the market's still a buy on all these minor pullbacks.
That's awesome. So speaking of AI, let's talk about that a little bit more, because I see you posting in the equities channels at times about AI. Are there particular individual stocks, or is there even an ETF, for a basket of AI stocks?
So that's a good question. I don't think there is an ETF strictly for AI, but there is an ETF that has cloud computing and AI is most efficiently driven through the cloud at this point. When we think of AI, I think most people think like driving cars or automatic cars or automatic machinery or something. But AI has really taken hold of the cloud space. So an ETF that I like is SKYY. It's done absolutely spectacular. It has a lot of cloud computing companies as well as AI companies. And so that's just kind of a small way that I'm looking to play AI. But another company, it's AYX. I read about them a long time ago, and this company is very interesting. They really, I think, are a deep mining data company, an AI data company. And my opinion is that they take that data and you know somehow use AI to create solutions from that data, and they sell that data. I
Oh,
think this is just I'm not too sure. Their stuff is kind of really high tech, but this is just one company that I've definitely kept an eye on, as far as, even though it trades at an extreme valuation, which is why I just can never trade it. It's a very high valuation, but the stock continues to go up because I think people do value AI a lot more than other growth technologies.
yeah,
And
yeah.
yeah, the stock went from 41 to it was at 47 in 2019, and now it's at 158. I mean, and
Oh,
I don't,
wow.
yeah, and I don't really see it slowing down considering it just broke out.
Right, right, definitely. This is, yeah, I mean, this is a high volume breakout too. And so this is not, it doesn't look like it's going to just stop and pull back around. Wow, this is definitely interesting. So what, in terms of AI, is this, something that you're investing in, or you just have your eye on it? And same thing with 5G. I mean, do you have, some stuff in your portfolio, or is this, just something on your watch list?
For 5G, because I think 5G has more, like I think 5G is kind of more so now, especially with Verizon getting into it, and even though it's not really anything at this point, I think the infrastructure is getting set up, and now is the time to invest. So I do have semiconductor stocks that are related to 5G growth. Recently, they've actually cut their guidance on when they expect 5G to really benefit their business. And so, I think the negative news has come out on MRVL is one of the semiconductor companies that I watch, Marvel, and I think Xilinx as probably the best products associated with that, XLNX. I think these two stocks in the semiconductor space, even though they've been hit pretty bad, like I said, their 5G estimates kind of did get cut, but I think the bad news is kind of priced in, and these stocks are looking pretty cheap to me. And as far as AI is concerned, I think you can, like a company like Xilinx, they also have AI and like AI integrated chips too. So I really think personally semis is the best way to play any technology boom. Um, but as far as strictly speaking, AI players, I think AYX was just the main one that I'm keeping my eye on.
That's good to know.
Hmm.
I'll definitely have to pay attention to this one because it. So, but is this company actually out there, making products, or is this one of those things where they're still in their, R&D stage?
I think they're kind of they're not in the very beginnings, but they're close to the beginning of the middle stage. And I actually think this is just a hunch. I think someone will acquire them because it seems like they just have such an edge up on data mining and technology. Like this company is just, they're killing it in their business. And so you can like the stock valuation is absolutely, it's one of the most expensive stocks that I follow. And usually I wouldn't even look at a stock like this that has this type of valuation, but I mean, it's just how much people value your technology and your process. And it seems like they're doing the best thing.
Right, right. That's a great thing to note. So we've talked about, how things went last week, some of the coronavirus checks, AI, 5G. Now what I want to talk about is, what exactly are you looking at for the week ahead? Because it looks like from what I read, um, there was another, I think 164, 169 cases that were found for more people, dying of coronavirus just the last 2 days. And so, is this something that you think that the case might be building for the market where, wait a second, like something, is really going wrong, especially we just also found out that Xi Jinping, did not disclose that he knew about the coronavirus since the beginning of January.
Oh, wow. I didn't even read that. Dang.
Yeah, yeah.
Whoa, that's
Man,
crazy.
I swear, Twitter knows everything before like all the news outlets.
Oh man, that's crazy. Okay. Well, I don't know. I want to say that I mean this virus is terrible and I think its ability to kill is awful and I'm just shocked at how the market is just consistently ignoring it. So, until it gives me a reason to not ignore it, I think I'm using this opportunity to buy some long-term names. So, two names that I really like that I think one are being hurt by the coronavirus short term, and two could benefit from another trend that I'm seeing, which is the long term decline of oil prices. I think in the last year or so, they had $1.1 trillion at least go into clean energy and clean investment firms. And I think that money gets taken out of the oil companies and the oil investments. And I think that's a really long term theme that's going to be happening. I don't think oil will ever get back to its high that it had in 2015 or whatever. I think it's gone. And
Wow.
so I think this long-term trend um, of how oil will continue to decline will help, especially transportation stocks. And my favorite stock, I've talked about it in the Discord channel a lot, which is UAL, United Airlines. They've gotten clocked recently because of the coronavirus, as you can see that dip, but they're a very rangy stock. And I think, as far as looking at the estimates, looking at how well this business is doing and the valuation of the company, I'm fine with buying it below $80 and just holding it for the long term. Because I think as the global economy recovers, one of the main beneficiaries of a strong global economy is leisure travel starts picking up, whether it's business, people have more money to spend on travel. And so I just love United Airlines. They don't have as much exposure to the Boeing Max that's kind of taken down these stocks as well. Like LUV, I think Boeing is BA.
Oh,
Boeing's been killed for it, but they're starting to do well. Maybe that whole thing is close to being subsided, but UAL does not have that much Boeing Max exposure, so they still have a lot of airlines. Like if you look at Southwest had so many orders for the Boeing Max, and now they're losing a ton of business. I used to really like Southwest before this whole Boeing thing, and now I think United is probably the best position.
Oh, wow.
Um, yeah. And so, you know, United is one. It benefits from the lower oil prices. It benefits from, you know, being short term hit by this coronavirus, yet the global economy is still expected to grow. So I like that. And then another name that also benefits from the same two reasons is Royal Caribbean Cruises, RCL. And I'm looking probably sometime this week to pick some up, like at some point. I think the estimates are very good. This company is still growing. Like, I think they grew this year, they're expected to grow 9%. And next year, they're expected to grow 12% just in revenues. And so I think for a company this big to be growing that much and accelerating revenues by this much, yet the stock price has not really done anything, I think you're getting it at a very good price at this point. And I think the fear is really there because of the whole, you know, Corona Cruise Line incident. I think people don't even want to touch these stocks, and I think that's the perfect time to buy.
Right, right. That's a great point. Buy the fear, right?
Exactly. Yeah, and like I said, their biggest cost is oil. And as oil continues to go down, it will naturally help these guys in the long run.
That's awesome. Um, so lastly, what I wanted to talk to you about is just, general positioning of yourself as a trader in a market that is, so far looks pretty healthy and bullish. But when you see stocks like this, say Royal Caribbean, or if you see, I don't know if you're into commodities and you trade oil, but say Boeing or United, do you hedge by putting shorts at certain times, even when in a bullish trending market? Or do you simply wait for good opportunities to buy the stock? Like, how do you, play the market?
So I mean, I haven't really done well on my shorts this year, so I kind of just have stopped shorting. Like, I think the first month, I'm sorry, not the first, I'm not the year. I probably was shorting a little bit, maybe a couple months ago, maybe 6 months ago, and I just was not doing good, and the market continued to go up, and so I just stopped. So I haven't resulted to shorting this market in a long time, but if I'm gonna play, you know, put on a hedge, I would probably go to TLT, which is it's literally a play on interest rates. And so as this stock or as this ETF goes up, that means rates continue to go down. So if there's some economic trouble or something, or I feel like rates may end up going down for whatever reason, either some economic reason, that's usually how I would play it. You know, if it's a negative economic reason, it would usually take equity markets down, but interest rates would go up. So that's primarily the only put that I've put on. Otherwise, no, I just kind of, you know, sit in cash and just wait for a good opportunity because the market will continue to give you good opportunities week in and week out.
Yeah, yeah. That's something that,
Oh,
what's
I'm
that?
sorry. I'm sorry. I completely forgot. Another way to play that I've noticed that I've played is buying utilities. Just XLU. That's also a good way because even during the worst times, it seems like look at this. Look at utilities. This is
Oh,
like an
man.
energy companies, and this is like a tech ETF right now.
Yeah, yeah. Wow.
And so
This,
this ETF has done largely outperformed, you know, a lot of the sectors besides tech. So even during the down days, this ETF is probably better. If I'm feeling a little bit scared about the market, I usually will buy some calls on this sector.
interesting. It's up 10% since beginning of January.
I know. Can you believe that? Utilities. I mean, you
Yeah,
don't even have that move in retail or anything.
right, right. That's interesting. So when you see something like utilities go up so much, does that raise any red flags, or how do you sort of interpret that?
It used to. I think, you know, the general thesis was that okay, when people start buying defensive sectors and companies like, you know, even defensive consumer stocks like Procter and Gamble, you know, that was largely considered okay. If you're scared about the market, you buy Procter and Gamble or you buy utilities. That stock has been doing extremely well. Um, so just because defensive names are doing good does not mean the market is close to coming down. I think that's something that I've learned over the past couple of days, or I'm sorry, not past couple of days, but past couple months. But they're not going to give you the beta that a tech company will, but they will give you the security that the tech companies don't have. So even on the down days, they don't go down as much. But on the update, they'll go up on the kind of flat days, on the slow days, and it's just a continued grind to the upside.
Yeah, yeah, definitely.
So
I really like the fact that you said, there's always opportunities in the market, and so you just got to wait till the next day. You know, it's
market will give you something every day.
exactly, exactly. I think traders and investors often forget that most of these markets. I mean, for the most part, they're open, 24/7 by 365. All you have to do is kind of wait it out over the weekend, at least in equities. And come Monday, you might see some other stock or sector just popping off, and there you go. There's your money making machine just ready to give you money.
Yeah, there's always money to be made in the market. Money will always move from one area to another, no matter what. It's just you have to have the eye span to see it, and the insight to kind of know when to get out of your sector and when to not. Because that's kind of what I say, and I've preached for a long time, that the stock market goes up in sectors, and a lot of times when you start to see a sector take a break, the money will go back into another sector, and it's with the use of technical trading and other fundamental processes, you can really kind of do your best to gauge when the money goes in and money goes out.
Right, right. That's a great point. So finally, let's kind of end it with, sector to sector, money rotations, right? Where do you
Hmm.
see right now is where you see the money inflows coming in which sector?
I think number one, so you had the healthcare sector take a break this week, but I
Okay.
think technically I looked at a lot of the stocks in the sector, and I think pharmaceuticals, healthcare plans, technically they look like they're ready to go back up and maybe make some more new highs. I think my favorite stock in the healthcare sector is probably J&J, Johnson and Johnson. That stock is setting up technically for a nice little bounce. It's already above its breakout price. Um, so I
Yeah.
like the healthcare sector just in general. And then, like I said, the selective leisurely companies like UAL and Carnival, or I'm sorry, the cruises.
Right, right. Interesting. Okay. Well, this is a lot of good information, man. I appreciate you giving us a rundown of what's happened, what to look out for the week ahead. I'm also looking forward to your Monday morning updates, and I hope more people get to watch your analysis because I really enjoy it. And
Thank you.
until then, I guess we'll be having this conversation next week.
All right. Sounds good, man. It was good
All
talking
right.
with you.
You too. Thanks, Vassal. Take care.
Thank you, man. Bye.
Bye.